Good day, everyone. This is Patrick from ECFX Code Trading System, and this is Saturday, the 25th of March, 2023. And this is the weekly technical analysis for spot gold and dollar yen for the 5th week of March, the final week of the month, and the final week of the quarter as well. And as we take a look at the spot gold quickly, it did shoot for the 2000 straight away on Monday before pulling back and then trying again on Thursday and then pause on the Friday. So basically wanted to get to the 2000 mark before some profit taking. And then on the Wednesday, recovered back up, fighting against the US dollar with the FOMC news and rate decision, which was slightly dovish. And the inverse was true for the dollar yen, where it fell right on the Monday before recovering. And then on Friday with the FOMC news, continued to falter as well till the end of the week, until some slight recovery on the Friday with the better than expected US flash PMIs. So that's the overall picture. Let's also take a look at the key highlights from last week and what to look out for next week with inflation figures for the US PCE price index and the Eurozone as well, with their flash estimates for CPI. Looking back at last week with the FOMC, where they did raise rates by a 0.25 percentage point and to 5%. And the Fed was a bit cautious in their statement, and they had to balance between the high inflation and the current bank crisis that's ongoing, and not sure what else is going to play out. So they were slightly hesitant and dovish, so that the market took advantage and weakened the US dollar, and the majors took advantage. Meanwhile, the following day, the Bank of England also raised rates by 25 basis points to 4.25% now. And that was also supported by the previous day, a higher UK CPI figure of over 10%. So they were not going to pause yet, but now they're pondering as well whether to pause and whether there could be another further rate hike, so also data dependent. And then on Friday, the US flash manufacturing and services PMIs came out higher than expected, indicating the economy was still strong, and this pushed up the US dollar to recover, and the major pairs had to pull back. So this coming week, there's also a change in the time for the Eurozone and the UK, 2 weeks later than the US, with their daylight savings time adding another hour ahead. But the key theme for this week is the inflation for the Eurozone as well as the US, with the core PCE price index. And previous estimates were shattered as it came out higher than expected at 0.6 versus 0.4. And even for the Eurozone, it was also higher than expected the previous month. So we'll see whether that remains the case, and that could be a problem for these two major economies. And the previous week, the Eurozone, the ECB had already raised rates by 50 basis points to try to catch up with the other economies, and pushing up to 3.5%. And the definitely have also been experiencing some high inflation figures as well. But they're hoping perhaps after this round, there could be a slowdown as the inflation, they're hoping that inflation could also slow down over the next quarter with lower energy prices. So we'll see what happens for this coming week, the last week of the month and the quarter. Right, let's head back to review the major pairs. So let's start with spot gold, where right on Monday, it already, since it was already fairly close, it shot up to spike through the 2000 mark before closing as a spinning top, and then a bearish day for Tuesday, on Tuesday, just to retrace back to these previous swing highs here. And in fact, we could just mark these here, these two spikes provided support for the spot gold. All right, and then on the Wednesday, after the FOMC rate decision, it climbed up all the way back into the previous resistance at the which turned to support at 1975. So back into that zone before testing the 2000 mark again, and then pulling back on the Friday with the better expected US flash PMIs. I think we can remove this one now, or just move it aside for now. And yes, we still have interim support at 1950, the interim resistance at 2000, the fib is at the 138 fib is at the 2019 area, so that's potentially another target that you could try to get at if there's any perhaps a drop in the PC price index, then that could push up the other majors, and then it could try to target this zone. But otherwise, it seems to be limited at the 2000 and support at 1950, so 500 pip zone, and it could just consolidate for the week. Let's also check the weekly time frame, and yes, it closed as a long wick doji here, almost a doji spinning top. So we could leave the fib as it is for now. Let's see if it's able to get up to 2019 or maybe 2020. If not, then it's for the following month. See whether there's a follow through, and that depends on how much the pullback is for this coming week, because it's already a fairly bullish month and already engulfing. So it could be a continuation move for next month. All right. Yeah, let's leave this key support at the 62 fib, or the 62 fib retracement back up, which coincides with the 1900 round figure. So that's definitely a strong support level here. All right, let's compare this with the US dollar index, the DXY, see how that performed last week. Here's the US dollar index, the DXY, and indeed it is inversely correlated with the euro here, and dipping right from the start of the week, dipping below the support and continuing to right to the 21 Fib retracement area, or the 78.6 if we take from this swing high. So similar to the euro. And then finding some support before climbing back up on the Friday with the US data. So we'll see if this week is able to break back above the 103, since it's finding some support at the 102, and whether it needs to break above the 103 and test the daily 55 coming down and the 62 Fib here, that's 103.50. So let's move this down to support. Key support at this Fib area now. And we could, let's see, we could also move this Fib over. Move this to swing high. So we trace back down to 78.6, climbing up to 50%. That aligns with the 103 level. Let's move the 103 as an interim resistance, which was key support before where it fell through. And let's see if this is just a retest and continuation move lower, or whether it's able to recover back up. Okay, and next key resistance is going to be right back up here at the 38 Fib and the daily 55. As well as this previous long-term swing level here. Yes, all the way back 6-7 years ago. So that's a key resistance area now. That's just at 103.60 to 70 area. And if we take a look at the weekly time frame, yeah, so it found support from the 78.6, and it could try to dip lower again before consolidating. Looks like it's going to be stuck between 102 and 103 for next week. So it could just bounce around within this range. But if it does dip down into the 78.6 again, then it could be a double bottom, and if we find strong support, then it could be a strong push back up. So similar in inverse fashion with the euro. Okay, so let's see what happens this upcoming week, the final week. And let's move back to the other majors. Let's move on to dollar yen. I had a weak start for the week, and then managed to recover on the Tuesday, but right into fib level and fell all the way back down to the swing low, and dipping, just spiking below the 130 for a while. And on the weekly time frame, yes, it's still a very close, a large spinning top here, and critical support at 130. So yeah, that was a massive support from the 130 level, and bouncing back up late on the Friday. If we take a look on the 4-hour time frame, yes, that was the bounce back up from the US session from the 9 p.m. On the 9 a.m. Eastern. Climbing back up here. Okay, so let's see if the 130 support will hold, and whether there's going to be a further continuation move lower, breaking below the 130. Because it's could try a bit deeper, but it could consolidate first for next week, and perhaps the monthly close with this bearish close here for there's a dark cloud cover, and it could extend its weakness for next month. So it depends on this coming week how it performs. I think we can move this one out for now to back to the 62 fib. That's an interim resistance. Support is at the critical support now. And for now, the key resistance could drop it down to the 50 fib, where it has confluence with the daily 55 and 200 EMAs. So that's going to be a very critical resistance zone. It's going to try to break that level. That's close to the 134 level. It's 133.90. Okay, so we'll use this, leave this fib as it is, and it's at a critical swing low level at the 100 fib. So that needs to hold if it's going to gather some support. So key week for the US dollar with the inflation figures coming up, but that's also right at the end of the week, so do watch out for the volatility. Okay, do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.